Watching Morgan Stanley up 2%, one of the top S&P gainers. About a 2-week high here on MS. Leslie Picker has been listening to the call, has some highlights. Hey, Leslie.
Hey, Carl, strength in equities and FIC, that's fixed income currencies and commodities trading, helped to offset some macro-induced declines in investment banking that we've seen across Wall Street. That really helped Morgan Stanley report far more excess capital than the other big banks. So the Q&A portion of the call kicked off with an analyst question about Morgan Stanley's plans for its higher earnings power, whether it be through acquisitions or organic investments. Chairman and CEO James Goldman called it a, quote, high-class problem, but noted the importance of having a safety net right now.
We've been very protective of keeping a sort of buffer on a buffer because you never know in this world. And I think what we've experienced with the markets in the last quarter were extremely volatile, and you have to anticipate the worst and make sure you're prepared for that. We clearly have done that. We've been chipping away at the excess capital.
He added that the firm will continue investing in technology and retirement platforms and also look internationally for potential deals. Shares of Morgan Stanley up about 2.8% right now. Goldman Sachs' analyst call kicked off a short while ago as well. CEO David Solomon beginning that call by noting, quote, the most significant event of the first quarter, no surprise here, was the invasion of Ukraine.
There's no question the first quarter was extremely volatile. Russia invaded Ukraine, inflation rose across the globe, and we saw an accelerating trend towards deglobalization. In recent decades, we've grown used to low inflation, low interest rates, and the free flow of people and goods across national borders. I believe we're entering a period that won't be the case, and the consequences for financial markets will be meaningful.
Solomon also said that they're seeing an increased risk of stagflation and mixed signals on consumer confidence. As for the quarter, Goldman beat the street's estimates thanks to reporting nearly $2 billion more revenue just in FIC trading than the street was expecting. FIC, again, fixed income currencies, commodities. Goldman shares now up 2% as well today, guys.
Leslie, thank you for that. Tape Jim does have a comment from Solomon saying that Ukraine conflict reduced Q1 revenue by about $300 million.
Well, it was, what, $500 million yesterday, Russia, Ukraine from J.P. Morgan. Just to go back to what James Gorman said, Morgan Stanley, they don't seem like a capital markets company anymore. They do a lot. I think that they have a terrific revenue stream, and the revenue stream is good, and we're not going to be able – I'm not saying they shouldn't be lumped in with these. I mean, when I went to – when I tried to get a job at Morgan Stanley, but it was all underwriting. All right, it was all capital markets. They weren't interested. They really didn't have a lot of interest in wealth management. They are a wealth management company, and they have a very solid wealth management company. And the wealth management, that doesn't leave because of Ukraine. It just doesn't stall. So maybe that's why Morgan Stanley's up more than the others, because their call was not about Ukraine. And I'm quite surprised that David Solomon led with Ukraine, because he could have easily just said, you know what, in time of turmoil, they come to us.
Right.